Alright, welcome back again to another part analysis on gbpusd. So without wasting much of our time, please, if this is your first time of watching my video or coming across my video, please, I want you to do me a favor, like and subscribe and turn on the notification button. So without wasting much of time, I just want to go straight to what I'm currently looking at for the week, or what is the current state of gbpusd and what I'm looking to do in the market, or our current directional buyer. So I'm on the weekly time frame. So without wasting much of our time, I just want to, first thing as usually I want to come to the weekly time frame or a higher time frame, just to be able to figure out the current direction where the strength of the momentum is really lying on. So from the weekly view, what we can see, I already have some few markup here. So what I'm currently looking at here is, I don't want to waste much time, so I'm focusing on the current trend of the market. So if I've watched my previous video, I think I've did analysis on this structure here. So this is the current move of the market. Now the current direction of the market is bearish. So what I want to focus on here is this move here. I want to get that. Now the direction of the market is to the downside. So what are we expected to do in this market? So once a market is pushing to the downside, we should be looking for opportunity to sell. Are we together? So we are looking for opportunity to sell. Now if you closely examine this price action from the weekly time, we will see a bullish candle. This week, the last week, I think close bullish. Now if you look at the previous price action, now we are seeing a bullish candle, but this is not enough confluence. This is not giving us, like, this bullish candle is concerning, but it's not giving us enough confluence to signal that the market is coming for a pullback or is coming for a reversal, because this is not a reversal candle, but it's giving us that at least the bulls step into the market previously. So we want to put this into consideration. Now first of all, the first thing we want to do here, we want to figure out our direction. Now we already know that the market is pointing to the downside, right? So as we scale down to the lower time frame, we want to put this behavior into consideration, this bullish candle into consideration of what the market is currently going to do altogether. So let's get down to the daily time frame. As I've said earlier, the direction, the overall, the major trend of the market is bearish. So what are we expected to do? We're expected to look for opportunity to sell, look for selling level. So now the market will never flow linearly to the downside. So from the weekly time, for what we see was the market was pushing to the downside, but as we scale down to the lower time, we begin to see structure. We begin to see structure on how the market is pushing to the downside. So the first thing we want to do as we scale down to the daily time, we want to be able to map out our structure. So what we can see, we have a structural high, a structural low, a structural high, a structural low, a structural high, structural low. Since we had a structure here, a drop and a positive drop, after a drop, what do we expect? A pullback. After a pullback, what do we anticipate for? A drop, which lead to a break of structure. So this is the last swing point that leads to the break of structure here. So this is our swing high and our swing low from the daily time frame. So what we want to do here is, as I already did the map up here, we had our daily structural high, our daily structural low. Now after a break of structure to the downside, what do we anticipate, or what do we expect from the market? We expect a retracement like a pullback to a significant level, and a drop to cause a break of structure and a drop to break the structure to signal a continuation of the bearish move. Now one thing we don't know is we don't really, once we had a break or structure, what do we expect? We expect a pullback. Now this pullback, can't really tell the exact level at which it will reverse from. We don't really know how deep the pullback is going to be. But what we don't expect this pullback to cause this break of this structural high, this high that leads to the break of this structure. So we expect that it should at least stay within the range, or it can come and make a double top, like make relative equal low and drop. We don't expect it to push and break above. Once it break above, that signal a shift in market structure. But from what we can see here currently now, we see that the market is still within the daily trending range. So we can say the market is still giving us a bearish momentum. It's a signal that is still going to push to the downside. So we want to see it on that. We want to be careful on how we place it based on the way the daily, weekly time frame is presenting itself. So what we have here is, now what my major focus now, since we're able to figure out our trading range, we have this was the impulsive leg and this is the retracement leg. Now what we want to do here is we want to analyze this range, this impulsive leg, because the essence of analyzing this impulsive leg, we want to be able to, now what's my approach of trading? I want to be able to figure out, now this is the impulsive leg. Within this impulsive leg, I want to be able to, as the market retraces, I want to be able to figure out level of supply at which the market has high possibility of reacting from and dropping to the downside. Let me come again. And this is an impulsive leg. After a break or structure, what do we anticipate? We anticipate a retracement. So within this impulsive leg, this sell side, I want to be able to figure out level of supply which is high chances of price reacting to and causing the market to drop down. Now here on the weekly time frame, I'm looking for opportunity to sell since the market is a bearish market. So I'm going to map out my supply level. This is our first level of from the daily time frame. This is after this break or structure. What do we anticipate? We expect price to push up to a level of supply and a drop to signal a continuation of move. So this is our first level of supply that we expect the market to push down. So before we can ever conclude that we can take trade, we want to closely analyze how the market is pushing to the upside, and also this bearish move. So our major focus is this range and the pullback. So let's get down to the lower time frame, the 4 hour. Alright, think okay. So here on the 4 hour time frame, this is our trading range. This was the range I mapped out. This is the range that lead to the break or structure. This is our low, this is our high, this is our low. So what we want to do here is, once we had a break or structure, what do we anticipate? We anticipate for a pullback to a significant level and a drop to cause this to break below this low to signal a continuation of the bearish move. Altogether, let me come again. Once you have a trading range that lead to the break or structure, this is the last low that is taken out. Once we add a break or structure, what do we anticipate? We anticipate a pullback. We anticipate a pullback to a significant level and a drop to signal a continuation of the bearish move. Now here on the 4 hour time frame, we want to be very careful. Also want to look at some. This was the daily supply zone that I mapped out. So from the 4 hour time frame, we don't really see a clean supply zone. So what we're going to do here is we're going to remove it. So within this, there's something I want to point out. So within this range, within this impulsive leg range. So what we see here, we see a supply zone here about here. So what do we have here? This is the leg. So once price push, now we had a retracement. Once price go to this level, we can see the massive drop. And what do we expect after a pullback to a significant level? What do we expect? We expect a push to cause a break to signal a continuation of the bearish move. But what we have here is quite different. After this push retracement, we had a drop. We had a push. Now, what we expect, the normal flow of the market is after a retracement, once we had this push, we expect this drop to cause a break or structure to signal a continuation of the bearish move. I hope you are together in this. We expect this push here to cause a break or structure to signal a continuation of the bearish trend. But what we have here, we had a failure to continue the signal. We had a failure to continue the bearish move. What happened here? Now, if you closely observe, at the low of the range, we had a level of demand. Now, the level of demand, there's high tendency of price coming here to react. So, since this is against the trend of the market, we are not going to pay much attention to it. We are not going to buy from it. But what happened here is, once price came to this level, it react, it push, it drop again, and sat on this level, this is more like a double bottom altogether. Now price can come to this level and react a bit and push down again. I'm getting it. But what happened here, it sat on it, give us a form of double bottom and push up, break this structural high. Now this is more like a shift in market structure, shift of market structure. Now, how do we know that the market is coming for a bullish move? It's when price shift market structure. Now the major structure of the market is here, but most of the time we cannot wait for price to close above the daily structure before we know that the market is coming for a reversal. So we can study the internal flow to know that the market is coming for a reversal. Now, another way around again, if we look at this market very carefully, now after this pullback here, what do we expect? We expect a break or structure, but price came, failed to close below this level. After this leg here, price came, failed to close below this level. What does this tell us? This is a signal that the bearish move is losing momentum. That is, the bull are kicking into the market. I don't know. Now what we expect normally, if this is a push, we expect this to cause a break to signal a continuation. But what we had there, we had a failure to break below this low, and we have this bullish spike to the upside, creating first break of this high. Price came again, push all the way to the upside, but failed to take out the daily structure and drop again. So what we are expecting now, this is a level of supply. Now price can easily. So what I'm currently looking at here is, once we had a bounce from this level here, now we expect this to cause a break or structure to signal a continuation of the bearish move. But what we had here, we had a failure. Price failed to cause a break below this structural low, and this is telling that the market is losing that is, the bear are losing momentum to break below this low, and it's signal that the bulls are stepping into the market. And once we had this aggressive push of the price to the upside. Now what would they expect? We don't expect it to cause a break of the major daily structural high. So we had a price shies away from the structural high. Oh yeah, we still have this impulsive drop down again. Now, what I'm really concerned here is we still have a level of demand here. So at this point you need to be very careful here, because now there's high chances that the price can still come here, bounce off from here. But as long as the price still within the daily trading range, we are still looking for opportunity, or like our major buyer should be looking for opportunity to sell. But from where the current price is now, we cannot sell the market, so we still have to wait for the market to at least give us a clear direction of where it's really trending to. At this point we cannot go in that okay, the market have fully switched to the bullish side, because there's no any clear significant pattern that suggests that the market is fully. We had a failure to close below. Now in the other way, you can still look at this market from other perspective. Now what, like this push here can still come and continue the bearish move. So what we have to do here, we have to wait for the opening of the week to closely analyze this price action to know the exact direction the market is really trending to. But at this point we are still going to wait to see that we cannot put a pending order here to buy. Next, the reason why we cannot put a pending order, because there's no clear reason, because the weekly time frame is only giving us a single candle. We're not really giving us a clear, we are not really seeing a clear pattern that clearly suggests if the market has completely reversed to the upside or not. So we are still going to wait for the opening of the week to see exactly what the market is going to do. And also we are not still going to rush into the sell. So let's observe the current price action, because this impulsive leg is quite tricky, so we still have to be very careful to closely examine this price action for now. Thank you. Peace out.